Kelvo out there. Kelvo said, bang, let's go. Kelvo telling me, my mama telling me to come on, man. Y'all, I'm sleeping. Y'all see what it is, man. Y'all see who on there with me. The young bull. What's up with it? Y'all pull up on YouTube. We live on YouTube. We got the young bull in the building. Let me get myself together. I'm getting the slides up. You know what I'm saying? This young man did his own due diligence, learning this stuff, putting this stuff into effect. Yeah, pull up on YouTube for us, Peach. Pull up on YouTube. We got the young bull in the building. This young man, he did his due diligence. He put the slides together himself. You know what I'm saying? He shot the slides to me. I ain't even read through them because I wanna see it just like y'all. All I did was like stick the cover page on there and stick the disclaimer in there, and it was a wrap. So we gonna get into it. All we're gonna do, I'm gonna pull it up. I'm gonna drop the disclaimer, and then the young bull gonna go, man. He gonna be talking to us about market maker sell models and market maker buy models. It's like I understand the concept, but my eyes can't see it like that, man. I done got old, you feel me? You know what I'm saying? My eyes don't see it like that. I know how to look at the price action and read the price action, but when it comes to like looking at the patterns and the setups and all that, my old eyes can't see it. So guess what I did? I brought in the young gunner. The young gunner gonna come through and drop a gem or two, you feel me? And you know what I'm saying? Like we say, man, it's all about each one teach one. It don't matter what your age is. It don't matter how long you've been doing this. You can always learn something, man. Set the pride to the side and let's build this new Wakanda together. You feel me? I'll go into slide presentation mode just like that there. And then I'm gonna get this out my way so I can see it. And then we're gonna get into it. Okay, let's go share screen. Share screen. Screen is shared. That screen right there, that's the one I want to share. Add it to this. Y'all see what it is? Y'all see what it is? Tim Tidbit takeover. Market maker sell model, market maker buy model, presented by special guest Quantity, the young bull. I supposed to put the young bull on there, you feel me? I supposed to put the young bull on there. You know what I'm saying? Why do I call him the young bull? Cause it's like he sit back, patient, be looking like, is that a cow? What that cow doing over there? And then all of a sudden you see the horns when it's time to get it to the market. Oh, that's a bull. He ain't playing with it. You feel me? So yeah, you know what I'm saying? He be doing his thing in the market, man. He's a, you know what I'm saying, he's a skilled trader. He's, he done been through all the ups and downs that everybody else go through. Let me move the thing out the way so we can, you know what I'm saying, we get the proper introduction. He done been through all the ups and downs, and everybody done been through the emotional roller coaster, the highs, the lows, the self-doubt, the confidence, the self-doubt again, the confidence again. Man, I'm going to give up. I ain't doing this. Man, I'm going to teach everybody I know. Oh, man, I'm going to give up again. Everybody go through it. You feel me? I go through it. You go through it. So, you know what I'm saying? Without further ado, we're going to get into slide mode, and I'm going to let the young bull Quantity do his thing. Hey, this stuff that we learned, and we just sharing it with the people because we're going to build this new Wakanda together. You feel me? Let's get into it, man. Y'all know what it is. It's Tim's Tid. This the Tim Tidbit takeover. You know what I'm saying? With special guest Quantity. Quantity the Don. Quantity the Bull. He ain't a bull or a bear. He's a beast. You feel me? He's a beast. Y'all know what we got to do first and foremost before we do anything. Y'all can say it with me together at this time, man. I am not a financial advisor. This go for me and Quantity. I'm going to say we. Replace the I with a we. We are not financial advisors. We are not fiduciaries. Nothing that we say should be taken as financial advice. Do your own research. Investing involves considerable risk, and you should always, I'm telling you, you should always consult a financial advisor before making any investment decisions. You feel me? Y'all already know who my family is, man. I ain't got to run down through it. You know what I'm saying? Y'all hear me talk about these people every single week. Y'all see the names. Y'all see Kiki. Y'all see the Come Up series. AJ and TiVo. Shout out to Cuz. Speaking of AJ and TiVo, I'm going to be on there again next Sunday. Next Sunday, it's going to be kind of not a repeat, but a refresher for the Spider Gang. But I'm going to be sharing it with the rest of the Come Up cousins on how to use the ES and other futures to make your options and investment decisions for the SPY and the QQQ and stuff like that. We're going to share it. The Spider Gang, we know this, but we're going to share it with the rest of the Come Up cousins, man. That's going to be next Sunday at 8 o'clock. 8 or 8:30. Y'all know what time Supplemental Sunday come on, man. Y'all pull up. And then the rest of the family. Oh, I got to shout out Lex. Shout out Lex, man. Y'all go to wealthwalk.com and support Lex, man. Pull up and buy your Wealthwalk. Oh, I got options today. Y'all pull up on Lex and buy her and support her shop, man. She got her own business. We got to support small businesses, man. Everybody else, y'all know who they is, man. That's my family. Y'all pull up on them. Y'all can download the slides. The slides in the link. The slides absolutely free. Y'all can get these slides that the young bull put together today. They in this number 30. Yeah, number 30 say Tim's Tidbit Takeover, MMSM and MMBM. Without further ado, I'm gonna close my mouth and relinquish the floor to the young bull, Quantity, aka Quantity the Don, aka Quantity Got Money, aka y'all know what it is, man. Let's go, man.
All right, so thank you for the introduction, Tim. I appreciate it. Okay, so these concepts are not mine, nor am I claiming them as my own. These ideas are ICT's, so all of this is on his YouTube. Specifically, he talks about sell models and buy models on the video trading development number 6. He goes in depth on like each of the phases of the models. But the concept with buy models or sell models, all right, is that it's the two basic concepts of the market, right? Because the market can either do 3 things. It can either buy, sell, or consolidate. That's the 3 phases that we go through. And that is known as the power of 3. It's accumulation, which is consolidation, manipulation, a breakout in a certain direction, and then distribution, which is where it's actually supposed to go, right? And these models play off of that. So each, for the sell model, right, you have from the left side to the right side. That's how you read it, from the left to the right. So you have the green box, which is what you would deem as the original consolidation. This is where you have like some range that we're in. We don't break certain highs, we don't break certain lows. We just range. That could last for any amount of time. Then the blue box. In that area, this is after the breakout from the consolidation range, and you're looking for like bullish structure now, right? Because it needs to run up to get to a discount. So you're looking for like bullish OTEs, a bullish break in market structure. You're looking for order blocks to be respected on the way up. That's what that is. It doesn't have to happen, but if it happens, then that's just something you also can play. Now the gray box, right? That's kind of like the worst part because it's the consolidation / turning point of the model. This could last any amount of time. It could last 2 minutes, 5 minutes, 50 days, 2 years. It doesn't matter. At that point, you're waiting to see a bearish break in market structure. Because even though on the left side, it had all of that bullish momentum and bullish price delivery, the key that where price wants to go, where it wants to go is bearish. It wants to go below the original consolidation, right? So after the break in market structure of the gray box, now the red boxes, it doesn't have to be 2. It could be 1. It could be 3. It could be 6. But this is where you want to see bearish delivery. This is where price will set lows that it retraces away from just to come back and take those lows out. So it sets a low, retraces up, takes a low, sets a low, retraces up, takes a low, until it gets below the original consolidation, which is the right green box. So these are called fractals, right? And a fractal is basically ICT's concept of price being fractal. It mimics across all time frames. So from the monthly chart down to the 1 second chart, they all rely on the same concepts. The only difference is the amount of liquidity that that resides in each of those time frames. So if you're like a low time frame trader, like someone that trades on the 1 minute to 5 minute, then your high time frame would be like the hour. That's probably like the highest you could go, and you'll be able to do decent. If you're like a longer term person, then your high time frame is like the daily, weekly, and monthly. So you can see these models on any and all time frames. You can see them on the daily, you can see them on the weekly, on the monthly, on the 1 second. You can see them, right? And they're basically split in half. So the name of the model, whether it's a sell or buy, is what happens on the right side of price. Because you see the left, it starts bullish, it has bullish activity, and then it ends with bearish activity, right? So you could be a person that you can trade like the whole model. Like if you're greedy, you could trade from the left to the right. You could trade it up and trade it down. But you could be a person that just trades the blue box. Like you could be a person that just trades the break out of the range, then the retest of maybe a breaker or order block or a gap or whatever, and then a run higher into more buy side liquidity, which would be above old highs. Or you could be a person that plays what the actual model is, which is the sell. So you could wait for the bearish break in market structure and take any of the OTEs or retraces that are going to happen after that break in market structure. I think that's about it. That's about the gist of it. So buy models now are basically the same thing. It's just flipped. So a sell model is an A and a buy model is a V, right? So you have from left to right, original consolidation, green box. The red box is bearish delivery of price, bearish OTE. It doesn't have to happen. Sometimes price doesn't give a retrace. Sometimes it just breaks away and runs into sell side liquidity. Then the gray box is again that consolidation / turning point. This is where a lot of fake outs happen. Like you'll have a lot of something called turtle soups, which are a fake break below an old low or above an old high. So it'll be like consolidation and price is just down, but it doesn't go lower. It reverses and heads back up. So you'll see things like that in that area. And then the two blue boxes are the bullish momentum after the break in market structure from that consolidation / gray box. And your target is above the original consolidation of that green box. So you want it to close higher than where that original consolidation started. And again, that's the same principle as the sell model, where it's fractal and on all time frames, right? I use it on the lower time frame charts, like the 1 minutes and the 5 minutes. I could trade those because those are normally like intraday, like from market open 9:30 to around like 12. You could find one of those models. I also use them as a weekly model, like a weekly template. So how that works is from Monday to Friday, you would look for certain highs to be made on certain days. So if it's a bearish week, like if you're expecting a sell model week, like for instance, OPEX week, or like a heavy Fed news week, you would expect probably Monday, Tuesday to be that green to blue box. And then Wednesday to be like the high of the week or that consolidation range, that consolidation box. Then you would expect a bearish break in market structure that Wednesday or that Thursday, and then Thursday, Friday, the last few days would be like expedited delivery of price. That's where you see OPEX week start bullish, but then end with us down like 3% because it's a sell model. That's what price was setting up. You could make the argument that it's the narrative driving price or it's price driving the narrative, but either way, somebody's going to make a story for why price did what it did, right? It's going to say, oh, it was investors offloading, or oh, we weren't buying and selling. And if you trade ICT concepts, then you know that price isn't really moving because people are buying and selling all the time. Like there are buy orders and sell orders, but that's not the case. Because if that was the case, then everybody would be buying and they'd be going straight up all the time, right? So it's an algorithm manipulating price. And all ICT concepts allow you to do is kind of see and anticipate what that algorithm is going to do, like what it's trying to do. That's where the drawn liquidity above highs, buy side liquidity, or below lows, sell side liquidity, right? So a market maker sell model is a draw on buy side, but it wants sell side. And a buy model is a draw on sell side, but it wants buy side. And it's basically like the concept of discount and premium, because from that original consolidation, we go up on a sell model, right? So we go from consolidation up. Higher prices are cheaper to short, right? When price goes up, puts are cheaper or shorting is cheaper, right? Same thing with a buy model. Price goes down, going for longs or buying is cheaper. That's what it is. So discount to premium. So we run from a original consolidation up to a discount, back down to a premium. You want to buy up in that discount range. You don't want to buy at a premium and sell at a premium. That's not what you want to do. Next slide, please. Okay, same thing. Bearish model can be found on all time frames. Each of those boxes are specific phase that you can trade. You can trade the whole thing. I'm not gonna lie. It's been times where I got like the whole move a couple times. It was lit, but you really should just look at what you're anticipating the model to be like. If it's a buy model, then I'm just looking for buys. If it's a sell model, then I'm just looking for sells. I'm not trying to be flip flopping, unless that's you. If that's you, then you'll kill it, right? So buy model, same thing. Sell model, same thing. Next slides on. All right, so I found an in price example, and you can find these all over, right? Like the more you watch, not just me, but the actual ICT's video, that trading plan development number 6. It's an hour long. Take notes, you'll be all right. The more you watch it, the easier it'll be to see. So how we had that like early Q1 of this year sell off, right? Like that, like we were just, it was right. That was a sell model, right? So we had original consolidation that I deemed. And it's kind of subjective. Like there's times where you could deem a spot as original consolidation, but if you pick an original consolidation spot, like if you think this is it, stick with that and just look for how price reacts to the range of that, right? Because if you just want a target of that, you want to either sell at the top of it, at the middle of the range, or at the bottom. You could go for the absolute bottom, right? So we had consolidation around September, October, bullish delivery, November, up. Right, then we had more consolidation at a high. Then we had more bullish activity. It was kind of a fake break in market structure because it created a gap, but that's an example of a turtle soup. That's a fake break below a low before we run higher. That light blue box. Gray box, barely any time consolidating. Like all that engineering that price is doing, and engineering just means that the algorithm that controls price builds liquidity, right? Because when we consolidate, the thing with consolidation is that you don't know which way is going to go, right? Because once you consolidate, we're building liquidity on both sides because we're in a range. So there's buy and sell. Normally, price would take one side first to then run to the other side. That's how smart money traps retail, right? Because that fake break, everyone's like, oh God, we're going long. Okay, we're going to 5,000. I got it. I'm going to put calls in. And all that is them getting your orders at a cheaper price because your stop loss is where they enter. So when you get stopped out, they're in 20,000 contracts deep, and then they just hold in until when the actual move happens. So that gray box, barely any consolidation above those highs. Then we had an actual break in market structure, right? That black candle that slammed through a swing low that created a gap. That normally, if you trade breaking market structure with that idea, a swing low or swing high being broken with a gap, you'll do okay. You'll get caught up in fakes, but the more data and the more you see price, you'll kind of be able to like understand that time is also an important factor of when a break may happen. Because you might have like, if you're trading sell models or buy models intraday, morning session from 9:30 to like 12, that's high volume. But from 12 to 1, that's lunchtime. And lunchtime has low volume and price would be choppy and kind of gross. And then you have the afternoon session at 1:30. And if you've been trading this week, the past week, you'll see that the afternoon basically created a second trend, right? Because it have a morning with sell down, then the afternoon will have some form of buy. That would be a buy model in that case. So we had a break in market structure. Then we had, after that break, right? That break is telling all smart money or the people that know what to look for that now we're looking for lows and a draw on sell side liquidity, right? So at this point, now this is the algorithm engineering more liquidity lower. It's going to create a low, then retrace higher, then break that low. And it's going to keep doing that as it seeks out the original consolidation. So from that break, we have an OTE. We set a swing low. We slam through that, right? We slam through that. Then we have, actually, in this case, right, it wasn't even like it taking its time. This was expedited because it built the model like from the buy aspect of the sell model. It built it up over like 110 days. So it was 110 days of creating all of this architecture and all this building that is just going to demolish in 21 days. So it built it in 110 days, but it delivered price bearishly in 21 days. 21. That's like that. It was just instant, right? So there's aspects of price expediting that way, and I don't really have a way to anticipate that. It just kind of happens. But that's what that was, right? That's how I would surmise that. And you normally kind of want to measure the length of the overall model that you're seeing and kind of see if you could break it in half, because you might find cases. It had a case. I don't have the screenshot, but it had a case where the model was split 50-50. Like it built buy side for this amount of days and it's sold down in that exact amount of days. So things like that aren't really a coincidence because it's all algorithmic based and it's values and absolute values that it uses. Okay, next slide. Whew. All right, so this is the same ES chart, right? This is on a 4 hour now. The first one was on a daily. This one is on a 4 hour. This model, if you could go back to the previous slide. Okay, can you go to the right green box, that area, please? Yes, okay. So the model on the next slide is this little interval of price, like from that green box up and then down lower. That's another sell model. So price made 2 sell models, right? Yeah, it's evil. It's evil if you don't know. So in this case, on a 4 hour, there was initial green box, a range of consolidation, blue box, bullish delivery higher, gray box, more consolidation / turning point, a low being broken, that BMS line, a low being broken with a gap form, price retraces into that area, and then sets lows, retraces up, sets lows, retraces up, breaks lows, break lows, all the way down below that outstanding wick, like that outlying wick that we have, because that's sell side liquidity. And sell side liquidity is basically just like the sell stops of people that went long or protecting their orders. Because all smart money wants to do is take your stops. They don't want you to hit your take profit. Because once you enter a trade, once you're in a trade, the only way you can get out of a trade is to liquidate. And that's either to be stopped out or for your target to be hit. And if you're stopped out, then that's good for them because you didn't make money and now they can make money. So that's what they want. So that was an example of a sell model. Another one. Okay, now buy models, right? So with sell and buy models, you'll see that they are oh, you gotta go back. You gotta go back one. Yeah, okay. So with with sell or buy models, you'll see that they kind of flow into each other, right? Because it's kind of like the ebb and flow of the market. Like we're either buying or selling or we're consolidating, and that's kind of all the same range that we have. So after that same 2 sell models that happened, right? And it was a Russian Ukraine, Fed, oh my God, we're 2 nukes, we're all gonna die. It was creating a buy model in that sell model. So where that first green box is on the left, okay, now we're back on a daily, right? So it was daily, 4 hour, and now daily. So if the 4 hour chart, that green box up there is the same gray box of the sell model. Like the beginning of this buy is the top of a previous sell model that already did its thing. So that gray box up there, oh no, not that one. The next slide. Yeah, that gray box up there, that's the original consolidation for this next slide's buy model, right? So it was consolidation. Then we had a break in market structure, right? Bearish OTEs down that completed the sell model. Now that's the sell half of a buy model because the models are split in half. You have a buy half and a sell half. The name of the model is what the ladder is, like the last part of price. So we sell down whatever, we take lows, we take lows. We reach a consolidation point. We set a swing high, an intermediate term high that needs to be broken. Breaking market structure happens, right? As that Russian-Ukraine thing is kind of calming down and the Fed expectations were in line. And we were like, okay, we can take a breath. Let's buy now. That's what happened. So breaking market structure. Then at least on a daily time frame, it retested that breaking market structure, created a gap. And then price had an expedited delivery up to those highs, right? And now that brings us to where we are now. So it was sell beginning of the year, then another sell. Now we had a small daily model buy, a daily buy model. Um, and now we have OPEX next week, right? And it's looking kind of bad, and expectations are to go a little lower, just a little, just a little bit lower. So it's looking sell model-y, right? Because if you look at a sell model picture, it's consolidation, then we run higher, then we have some form of break in market structure lower. Can you see that on this chart? Where an original consolidation of price would be for a sell model? Because it looks like that gray box. That gray box is a range of consolidation, right? At least daily wise. We didn't really go much higher or lower in this range. We created a bullish order block with those 3 down close candles. OTE is... Yes, OTE is just optimal trade entry, which is using the fibs between a swing high and a swing low and taking a retrace into a discount of below 50% of the fib, depending on if you're bullish or bearish.
Yeah, we're gonna get the questions at the
Okay,
end.
my bad.
Yeah, we're gonna get them at the end.
sorry. Okay, so that's the buy model, right? So and it's looking kind of sell model-y, I'm not gonna lie, but we'll leave that up to what happens next week. So next slide, Unc, please. Okay, and now this, right? This was kind of hard to see because it was such like a wide span of time, but this is back during the COVID crash, right? This is the COVID. Oh my God! This is a crash. I wasn't in the market at that time, so I wasn't there to experience that. But that was another concept of a buy model. We had some form of consolidation, then we had a break in market structure, aka COVID. Then we had a retrace. Then we had more delivery down, some form of consolidation, break in market structure, and then bullish delivery all the way into the year end, hitting the original consolidation and higher. So, I mean, kind of look at certain things. Once you start, I'm not saying to take ICT as like a religion and praise God and all of that, but once you just open your mind and look at certain things a certain way, it's not really all that surprising. Like, and you can find these models on any time frame on any asset. Look at oil, CL. I don't have that chart. I didn't take that chart, but it just came to me. But oil is a sell model. Like the daily / 4 hour, that's a sell model. That's what that is. So it's coming for that 92, 90 area. Is just taking its time, but it is a sell model if you look at it and you reference the picture. That's kind of all I had really on buy model, sell models. If anyone has any questions that they want to place in the chat, I guess. Or if you have questions,
Man, y'all better give it up for the young bull, man. You feel me? Somebody better give it up to the young bull, cause this young man just broke that down. This young man just broke that down. Well, where my screen go? Oh, there it go. There it go right now. Okay, man. Okay, I appreciate that, man. I
No problem.
appreciate that. Good job, man. Do anybody? I'm out of focus. Do anybody got any questions for Quantity? Well, you already answered that, but if you want to reiterate again for somebody asked about the OTE, people just said, Tranisha saying thanks, Kevo, Dennis, everybody, you know what I'm saying? Here to learn and share. Vic, Vic, is that Vic that's on vacation right now? That's a different Vic.
I think that's a homie, man. Vic. What's up, Vic?
Yeah, man. I ain't got no questions. It was dope, man. Hey, like I say, my eyes can't see it. I'm gonna go back. I'm gonna run this one back myself and look at it again, cause you know what I'm saying. I ain't never had nobody like break it down how you broke it down. I heard people talk about it, but the way you know what I'm saying, well, you were speaking a language that I can understand. You know what I'm saying, you were speaking something that I can understand. So when I go back and look at it now, just like I said, when I did a one-on-one with Peter, and when he broke down the ICT stuff for me, when I went back and looked at ICT, it all made sense. You know what I'm saying? Because he said it in a way. Shout out Tranisha. Tranisha said thanks. it all made sense. So, you know what I'm saying, the way you broke it down, I'm gonna run this back and look at it again, and maybe my old eyes will start seeing it like that right there, man. But I really appreciate you, man. I see Kashaya. Look like Kashaya got a question. Put that up.
Mhm.
Oh, what's your favorite? Oh, Mary. Mary say, what's your favorite model?
I like cell models. I really like because price like it takes its time going up, but when it's time to sell, everybody sells. Nobody has a problem. Hey, I'm gonna sell out, so it just it moves. But I'll trade both though. I trade both, buy and sell.
I can't even hold you. I could see, I could see the sales better than I could see the buys. You know what I'm
Hmm.
saying? Like for some reason my eyes just see it better. Like I could see like the fair value gap entry or the OTE entry on sales better than I could see on the buys. I don't know why. Maybe I claim to be a bull and I'm really a bear. I don't know, but I could just see it better. um so is the models your core strategy?
Yes. Okay, so that's a little complicated. So right, it's one thing to have a model, a buy or a sell model, which is the easiest you could get it. That's why I picked those two because it's like the basics of price, you either buy or you sell. But with those models, you want to have an entry model, right? You can hear the word models a lot, right? So you can have a buy and a sell model, but it's to see those and be able to accurately grade them, like be able to say like this is a high quality setup, high quality price, like, and there's things you can look for with that. Like it could be time of week, time of day, time of week, time of day. What's another thing? How much liquidity we took before the buy or sell happens. How are you mentally? Are you looking for sells? Or are you hoping for a buy? Like all that comes in. So the buy and sell is a core strategy, but you have to pair that with an entry model. And entry models could be something simple like the ICT mentorship, the 2022. It could be a break in market structure and a gap. You take that trade, or it could be a break in market structure and an OTE, or you could trade off an order block, or you could trade off a breaker, or you could match the EMAs or whatever your system is. You could do that, right? You could trade that. Um,
Yeah, Kashaya had that right there on that right there. Kashaya, it like he just said, it's about what entry you're using. It's not so much the model itself. It's just identifying. Okay, we going toward sell side liquidity. We going toward buy side liquidity, and you picking your entry. What you like he said, you can trade both sides. You know what I'm saying? Like if you good enough to see it, if you good enough to spot it and just call it, you be like, okay, we going into a buy model, right? So while you going into the buy model, you can sell and then buy it back up and then sell it back down and buy it back up. It's like you can, but you're gonna be. It's all about your entry. Like he said, are you an EMA trader? Are you a fair value gap trader? Are you a OTE trader? Are you a order block trader? Like whatever your, you know what I'm saying, your entry strategy is. Remember your whole overall strategy is like you're gonna have a setup and a trigger within that strategy before you pull the trigger. Once you see your trigger, that's when you hit the button. You see what I'm saying?
but just to further on that, if you see the model on like a higher time frame, like daily or 4 hour or whatever, that's when you go to the lower time frame to frame your entry, right? How low you go, that depends on you. But if you see it on the 4 hour, then you want to look for it on the 15 minute or the 5 minute, and then that's where you frame your risk. Because it's thing, right? It's one thing to see the buy or sell model, then it's to see your entry model or whatever. But is that entry model something that you want to take? Like, is it favorable? Is the gap wide enough? Is it too small? Are there too many gaps? Has price taken too much liquidity on a lower time frame that now once you go to lower time frame, you're like, I don't know where to place my entry. It's 6 gaps, and I am a gap trader. So which one do I take? Like that's where things like that comes in, and that can only be answered with experience. I'm kind of getting there yet, like getting notes and things like that down and data, just a lot of screenshots, going back in time, looking at all those things. So um, yeah, that's kind of that. Um, our
How you doing up,
OTE.
baby? Where did she go? Pop that next. She had popped the question up.
I see one with the OTE. Yeah, that
Yeah.
one. Yes and no. With ICT concepts, it's all about like confluence, right? Because it's kind of like it's like you're a detective. You're a detective, and you're building a case on price, right? You're a detective that's saying, I think price is gonna go down. I think we're gonna sell down. What's your evidence, right? Do you see a break in market structure? Do you see a gap? Do you see an order block? Does that gap slash order block align with a OTE? Is it in your trade window, 9:30 to 12, if that's your window? Like things like that. So you could look for OTE and a fair value gap. Like if you have a gap and you draw your fibs and then the 62 or the 70.5 lines up in that gap, then that's probably a higher probability trade. The more confluence you could find for your trades, kind of equals the higher probability. And you'll see why I say kind of when you start like looking at it, because you'll see things that look like, oh, this is it, and then it just completely ignores it. And that's if you get like caught up on lower time frames, because price being fractal means that it ripples down, but it's the direction of which it ripples, right? Because it ripples from high time frame to low time frame. Because institutions aren't necessarily on the 1 minute, like high frequency algorithms are that do quick fast orders and trades. They're on the 1 minute, but institutions have so much liquidity and capital that they are on the weekly, daily, and monthly. So high time frame to lower time frame. You see a break in market structure on the high time frame, then it's probably time to zoom in a little bit on the lower time frames to see if the um, the beginning of your entry model exists. Like if it's starting to form. Not every trade is your trade, but when it's your trade and you have the background and the data and all that stuff, then you just take the shot. You win or you lose, that's it. That's what a stop loss is for. That's when you frame your risk. Um, Another guy I drew inspiration from is a guy named Stock God, right? He talks a lot about like risk management and grading your setups. And before I was taking like almost every trade. I was like, oh, yeah, this is it, this is it. But I'm looking back and I'm like, those were trash. What was I doing? Like that was I had like a 50-point stop on an NQ. Like, nah, I don't need to be doing that. So I
Two
started grading it
200
and
points,
refining
200
it.
points,
Now I
50
have like
contracts.
set things that I could look for and be like, this is high probability. I'm going in with this. And I'm still on paper with futures. So I'm not, you know what I'm saying? I'm not live yet, but I'm still on paper. But most of the time I trade, well, not most of the time, I trade QQQ, which is a derivative of the NQ. So NQ trades are basically my QQQ trades. So if I don't want to take it on futures, I'll take it on options. So yeah. So I
Yeah,
mean,
and one other thing on
yeah,
that,
man. Just I
for
mean,
anybody
ICT is
that don't
cool to
know,
begin with, like the price action
can
and
am I
the
muted?
knowledge and the whoa, I can see the order blocks, the institutions, ah. But then you need to like understand yourself first, because ICT understands who he is. He understands what he could do. You don't fully understand that yet. So once you get that, then it's smooth sailing from there, and you just risk manage. That's kind of
Am
it.
I muted? Can you
And
hear
I'm
me?
not fully, you know what I'm saying, free, but steps are being taken, risk to be
Am I muted,
managed. It's
Quinn?
cool. So, yeah, man.
Hello?
Yo,
Yeah. Oh, you can hear me?
yes, I'm sorry.
Oh, okay. I thought I was muted. I was just gonna say on that about the for anybody that don't know the question that Mary had about the OTE equal fair value gaps, but OTE is optimum trade entry. That's something that comes from ICT, and it kind of lines up with fibs, right? It's coming back to a certain point. The algos is bringing it back to a certain point. It might be coming back to an order block. It may be coming back to a fair value gap. It may be coming to a breaker. You know what I'm saying? But if you put the fibs from the high from the high to the low of that leg, it 9 times out of 10 it's gonna line up with the 62 to 70. It's gonna be right there around a fib line, and he deemed that the optimum trade entry. And then the fair value gap, of course, is the gap. So it could go to a gap, but yeah, like you said, it's not the same thing. What Lex
Man,
talking
what's up,
about?
Lex?
What Lex talking about? Okay. Oh, they said Quanta was in the zone. That's why he couldn't hear me.
Yeah, I'm
Okay.
sorry. I muted it because it had a weird echo, so I didn't hear
Oh,
you.
my bad. I had the thing turned up. I'm sorry. Was it echoing for everybody? I had the
Oh
volume
man.
turned up when I had myself muted. I hope it wasn't. Was it echoing for everybody? I hope it wasn't. Any other questions for the young bull? We've been on here for 40 minutes now. Any other questions for Quantity? We ain't gonna hold him forever. Hey, look here. You know what I'm saying? These are not things that was made up by Quantity. It's not things that were made up by me. It's stuff that we picked up along the way on our journeys from great people like Stock God, people like ICT, people like Kiki Williams, people like Draco, Big Draco be doing stuff, Briscoe, Larry, Alexandria Cartwright. These all the P Dub, the God, the homie Boyd. These all fabulous traders that we've met along the way on this journey. And this is just stuff that we pick up and we share for the free 99 because we trying to build Wakanda, man. Like the homie Jason say, we all we got, but that's okay because we all we need. Ticks. Daniel, you must be new here. We don't go for ticks, baby. We be going for points. You feel me? You see what Quantity said? You see what Quantity said? I aim for 30 to 70 points. You must be new here. But it's all jokes, Daniel. We don't, you know what I'm saying? It's all love. But like when we all first started out, we was going for ticks. We was happy about those 5. Man, if I got 15 ticks, I went crazy. You feel me? You know what I'm saying? But now, if I don't get at least 15 points, I be crying. Like, what's wrong? I took a trash trade. Yeah, Lex said point not ticks. That's right. The homie trading with a dumb. The homie Mark say profit don't mean nothing. Consistency is the key. And that's why, you know what I'm saying? Like, that's why I want to bring the young bull on here, man, to show that, you know what I'm saying, this stuff really work. You feel me? This stuff really work. And like, I'm looking at the same charts. He brought us through from the beginning of the year. And I had already told y'all, I don't know how to see the models. You know what I'm saying? I read the price action and I take my trades based off of, you know what I'm saying, my liquidity run reversal, based off of Lex's melting butter. You know what I'm saying? Rising bread. I take a fair value gap. You know what I'm saying? I'll take a OTE. Whatever it is, it's all the stuff I'm taking, but it's all within the same thing that he just taught. I can't see it like that, but I understand the price action. So if you understand the price action, this stuff work. Just like me and Lex, sometimes me and Lex be talking how we took the same trade, but she took it off of these set of rules, this set of criteria, should I say, and I took it off this criteria, but we taking the exact same trade, maybe, you know what I'm saying, maybe a point off. You know what I'm saying? I might enter at 41.51 and she entered at 41.49. You know what I'm saying? It's like, it's cool. We looking at the same, this stuff work, man. This stuff work, and it's not impossible. It's not impossible. It ain't got nothing to do. It ain't got nothing to do with race, creed, a color, whatever you want to call it. It's all about, do you got the discipline? Do you got the mindset to want it? Do you got the ability to control self? Because you can see it all day long, but you will spiral if you ain't got that discipline. You got to control yourself. You got to understand losing is a part of it. You're gonna take bad trades, but what I say all the time, if your risk management is tight, y'all already seen, I done had a couple weeks where I took 9 trades. Last week I was on vacation, but week before last, I took 9 trades and I only won 4. But I ended the week up 10% on my overall portfolio. So it was a losing week for me, but I came out profitable because if your risk management in place, hey, that's all you need, man. Hey, man, I don't see no other, what you say, Lex? What Lex say? Being disciplined. What they did don't mean you gonna be disciplined tomorrow. You gotta show up every day. That's it. You gotta show up every day. You feel me? You gotta show up every day. You know what I'm saying? Lex is a phenomenal trader. You know what I'm saying? And she let her emotions get the best of her the other day. It happens. It happens. But the first thing you gotta do, the hardest part about it is admitting it. Once you admit it, admit that you spiraled, admit that you did something wrong, now that's the hard part out of the way. Now it's time, how you gonna move forward? You know what I'm saying? Are you gonna sit there and sulk, or are you gonna suck it up and move on? You know what I'm saying? When I lost that big amount of money back in the summer of 2021, I could have curled up somewhat. You know what I'm saying? But guess what? You got to keep moving on. If you aim for 30 to 70 points, how many points are you willing to lose on the trade?
Oh, I typed it, but it's kind of it's different because when it comes to me trading and that other concept I referenced where you're grading to see if it's high probability or not. If I have a trade on the NQ, because NQ is kind of wild, so you kind of need a wider stop. If I have a trade that's like a 30-point stop, which is like around 70 something dollars, my target probably has to be like 60 to 100 points to make it like at least a 3R trade because I don't have the screenshot of this, but on Friday, I had it was a small buy model on the NQ, the morning session, and that was like a 120-point trade. So if it stops wider, then I'm either putting on less risk, which is less size, or my target is larger. But if it's a smaller stop, tighter stop means higher risk, which means I can put more size on. So that's how that works. But
Yo,
the smallest stop I've had was like 10, 11 points on it, but that was an 80-point target. So
yo. And a lot of time with futures, it's kind of difficult to have a set stop. It's kind of difficult to have a set stop size.
mhm.
It's like I have my ATMs are set up with a set stop, which I know I'm not gonna go no more than, and then but if it's not within, if that setup is not within that range, I know I'm not taking it. You know what I'm saying? But if that's set up, and if it gives me a setup where I can risk less, you know what I'm saying, I'll take it, and then I'll just adjust my stop instead of risking 9 points. Now I'm risking 4 points. I'll just adjust it
Mhm.
down, but I'll never take one that's outside that. So it's kind of hard to have like a set amount. Like you may be going for 70 points today, and it only requires you to risk 5, and then tomorrow you be going for 70 point, and it might require you to risk 15, depending on how, you know what I'm saying, how the setup was played out. You see what I'm saying? So it's kind of hard to have a set. Do you prefer QQQ over SPY?
Yes, I do. Even though sometimes it's a little too much sometimes, but it moves very, very aggressively. Like I could buy a spy call and a QQ call at the same price, same time, whatever. But 10 minutes later, they both move in the same direction. QQ's up like 50 to 60%, and spy is around like 25, 30. So I just want more money. That's kind of it.
Yeah.
Damn, 165. Sheesh. Okay, trading with a dummy. God damn,
Yeah, killing it, killing it.
that's fire.
But yeah, all right, y'all. I appreciate y'all. 47 minutes. We ain't gonna hold Quanta up no more. Quanta, I appreciate you.
No problem.
Y'all run this back. Y'all run this back. Y'all hit the like button. Y'all still in here. Y'all hit the like button. Y'all share it with the cousins. Appreciate y'all for showing up and supporting the young bull. Quanta, I appreciate you for pulling up and dropping. I'm gonna run this back and look at, cause like I say, you were speaking a language I understand. You know what I'm saying? So now when I go back and look at it, it's probably gonna make more sense. You know what I'm saying? Probably gonna make more sense. Y'all put some fire and some claps in the chat for the young bull. If you think he did good, I think he did good. I'm gonna clap it up for you right here. You feel me? I think he did amazing. Hey man, keep doing what you're doing, man. Keep inspiring people. Keep, you know what I'm saying? Hey, you give me hope for the future. You
I
inspire me,
appreciate
man.
that.
Young folk like you know what I'm saying? Young folk like Lex. You feel me? It's like I'm like, hey man, I got kids y'all age, man. You feel me? Y'all out here doing this stuff. Y'all, you know what I'm saying? You not only do you understand it, you sharing it too. You know what I'm saying? When you can share something, that means you really understand it. You feel me? Yeah. I, ain't no more questions, Mark. We ain't answering no more questions. You should have asked it earlier.
Yes. Do the ES. Yeah, don't start with the NQ. Don't. Please don't.
Yeah. So he asking, Mark was asking for newbies, should you start with the ES? Yeah. Start with ES. Like I wish there was a micro ZB. I wish it was a micro ZB because the ZB move real slow and you can really sit there and it give you a million years to see the move play out. You know what I'm saying? Like the ES and the NQ during like the New York session, you would get ran over like a frog in the street. It be moving so fast, you like, oh my God, what just happened? I wish it was a micro ZB so that people can get in at a lower price point and really learn how to watch the moves really slow. Like the ZB in the New York session moves like the ES during the Asian session. It moved real slow. You know what I'm saying? Like the ES during the Asian session moved real slow. You know what I'm saying? But the ZB moves slow all day. But yeah, man, that's it, man. We about to get out of here. I appreciate y'all for pulling up and supporting Corner Corner. I appreciate you again, man. Y'all know what it is. Till the next time. Next Sunday, I got to figure out what we're gonna talk about. I'm gonna put up a poll. But next Sunday night, I'm gonna be on the come up series again, doing how to use the futures to plot your options entries for swinging options, swinging shares, using the futures to do that. Especially if you're doing the SPY or the QQQ and you're not looking at the ES and the NQ, you're doing yourself a big disservice because you're missing a whole lot of the price action because the QQQ and the SPY only trade during the New York time. You know what I'm saying? So we're gonna be talking about that on the come up series on the supplemental Sunday next Sunday night on the 17th, I think it is. And I'll put up a poll for what we're gonna talk about on Tim's Tidbit. Y'all let me know what we're gonna talk about. Corner, would you take
That depends. I measure the distance of the gap, and if it's a certain size, then I have a certain entry in that gap. So if it's a wider gap, then I'm probably taking bearish trade. If it's a wide gap, I'm probably taking the bottom of it or the half of it. If it's a small gap, like 2, 4, 6 points, then I'm taking a gap fill on that. But it varies.
Yo, and mine, I don't care what the size of the gap is. I look at where I got to put my stop on my setup. Cause my setup that I take, it's like I put the stop goes above the previous high or the previous low. So I measure from the low down into the gap. If it, you know what I'm saying, like if it happened to land where the bottom gap, middle of the gap, top of the gap, that's cool. But I do it based off my risk assessment. You know what I'm saying, the max risk that I'm gonna take. I measure from there, and if it's well within the risk, you know what I'm saying, I'll just take it anywhere. Long as long as you know what I'm saying, the quickest way to get me in the trade. I just want to get in the trade. If it's not, you know what I'm saying, if it's well within my risk, I'll take it at the bottom of the gap or the top of the gap, depending on if it's bullish or bearish, because I just want to get in the trade. Because I know the heat that I'm gonna take is not gonna stop me out. Yeah. All right. So yeah, man, that's it. Y'all know what it is. Till next week, we gone.
Thank y'all. I appreciate it.